How's it going, everybody? My name is Ryan and we're back with another dividend investing video here on M1 Finance. This is my passive income portfolio. We're currently sitting at a balance of $6,435.76. We are up market gain $339.48 with an average of $6.07, or correction, 6.07%, and my earned dividends are up to $58.59. Activity since my last video: I had a deposit with 13 more buys, a couple more dividends. As you can see, they're flowing in pretty nicely here. I can't wait to keep getting more. As for this video, I'm going to continue with my Pie series and discuss kind of what we got going on. I'm going to be moving through to Telecom and Healthcare, what I've got in both of these. Then we're going to jump over to Seeking Alpha and kind of check out the dividends of these stocks and everything that are included in that. And then if you subscribe to my channel, you'll be notified for my next video, which is going to cover my industrials and energy sectors, or industrial and energy pies, rather, that I have here in my portfolio. So without further ado, let's jump in. So as you can see, for Telecom, I've got $708.45 invested. Says I'm down $7.30, but my earned dividends are $9.14. So scrolling down, I've only got 3 companies in here, split not even equally: AT&T, Verizon, and Comcast. AT&T I've got set up at 45%. I've had this stock since I had my Robinhood account, and I used to buy quite aggressively on it. I was very bullish on AT&T just because I really like the dividend, I like the company, and it felt good to buy that and continually seeing those dividends increase. And then as you can see, I just recently added in Verizon and Comcast here in these two. So if we jump in AT&T, almost $370 invested into it, and I've earned $6.38 in dividends from them. I own 12.27 shares. Average share price is $31.95, and it's currently trading at 30.13, which technically I'm going to be down on this one. So we'll jump over to Seeking Alpha, search for AT&T. As we pull it up here, go over to our dividends. And here we are. So as you can see, AT&T is a dividend aristocrat. Over 25 years of dividend growth. We're sitting at 36 years. Currently, the yield here is 6.9%, yielding $2.08 per year. The payout ratio as 65.22%. I really like that payout ratio. It's healthy. They can sustain that. Granted, I know the company has debt. However, with this dividend yield, they're able to still pay out shareholders and take that other 35% or so of their earnings and use that to grow their company, pay off debt, and do whatever else their executives wish to do. So it's currently paying 52 cents per share, and the next payout date is going to be on August 3rd. So if you've held on or before July 9th and through that date, the ex-dividend date, you'll be paid out on August 3rd. So if we do the little math here, 52 cents times my 12.27 shares times 12.27 shares, I should be getting $6.38 come August 3rd. I'm really excited about that. That's a really good dividend from them. And as you can see, I've already been paid one of those dividends from them. And those are going to continue coming in. Obviously, when I put more money into AT&T, that'll grow. And as long as they don't suspend or cut their dividend or anything, that number is going to keep increasing. And I have a feeling that AT&T is going to want to keep increasing that and maintain their status as a dividend aristocrat. So jumping back, Telecom, and we've got Verizon Wireless. I really wanted to invest in Verizon. I've always seen how much of a good company it is, and a lot of dividend investors are buying into this. Also, my cell carrier is Verizon, so I figured, I'm paying them every month for my phone. I might as well invest in them and have them pay me for my investment and collect the dividends. So I currently own 3.35 shares of Verizon, and I bought in at 55.55, and it's 54.59 right now, so I'm a little bit down. But as you see, we'll jump back over VZ, just VZ, Verizon Communications, straight into the dividends. Another great dividend payer. This one, the yield is not quite as high as AT&T's. However, the actual amount is. The only reason the yield is a little bit lower is because the stock price is higher. So, if your stock is at 50 cents and share price goes up, your dividend yield goes down. And vice versa, if your stock price goes down, the dividend yield goes up. So a lot of people will say that if you see a company with a really high dividend yield, that could be that the company has a really low stock price. And if it's a quality company, there's nothing wrong with buying into that. However, you should be cautious because that could mean that the company is struggling and it could have some issues down the road. So 4.51% annually, I will earn $2.46 per year per share that I own, and they pay out at 51.76%, which is a outstanding payout ratio for this company, and a dividend growth of 13 years. Moving down, they pay 61 cents per share, almost 62 per share every quarter, and it has the exact same ex-dividend date and payout date as AT&T. So, like I previously said, if you hold through July 9th, you're going to get paid out on August 3rd again from another company here. And so with my 3.35 shares at 61 cents, fast forward to August 8th, and I should be receiving $2.04 for my holdings in Verizon. So, last, and as you can see, I've already collected a dividend from them, and that's going to continue growing. Last but not least, Comcast. Comcast, I've received 70 cents so far, $155.96 invested. Currently own 3.85 shares of Comcast for an average price of $39.10, and it's trading at $40.51, so I'm up just a little bit there. So then we can jump back over to Seeking Alpha, CMCSA, Comcast Corporation. Jump into our dividends here. And so as you can see, this one, Comcast has a substantially lower payout amount and payout percentage. However, their payout ratio is also a bunch lower. And look at this real quick. Look at their growth rate. Their 5-year growth rate of their dividend is 13.3%. So that means that this dividend payment, or a 5-year, the rate of their growth of this dividend has been 13.3%. So if I held this company for that amount of time, I would be collecting that dividend for the entire time that that I owned it. And so this company's paying 23 cents. Ex-dividend date is 6/30 of 2020, June 30th. Payout date is 7/22. So if you held through this date, then you're going to be collecting a dividend here on the 22nd. So today's the 12th, so in 10 days, I'll be receiving a payment from Comcast of $3.85 times 23, 89 cents. So here it's only 70, which is one dividend payment. Now I'll be collecting 89 cents. So you can see that growth of how much more I've got invested into the company. Now we're going backward. That was all my telecom stocks. So we'll jump over to healthcare. Healthcare, I've got $689.55 invested at a rate of, says I'm down $8.84, negative 1.76%. My dividends are $3.07. So if we look at Pfizer here, you'll see I've got $175.20 invested with earned dividends of 52 cents. So we jump over to Seeking Alpha, PFE. Seeking Alpha yields 4.49%, payout ratio of 55.67%. Dividend growth is 10 years, 6.72%, which is pretty good. And then over here, payout amount is 38 cents. So you hold through July 30th, and you'll receive payout on September 1st for 38 cents per share. I currently own 5.17 shares for a payout of 1.96, $1.96 that I'll be receiving on September 1st. And you can see there again the increase in the dividends that I've had. Generally, my telecom, healthcare, industrial, and energy sectors have been really low. So every time I deposit M1 Finance, the algorithm has been putting more money into those sectors, so I'm increasing the dividends quite a bit. Next is AbbVie. As you can see in AbbVie, I haven't collected any dividends just yet, but we're hanging on, okay? Average share price, 87.28, and price currently is 96.83, so I'm up quite a bit, and I own 1.78 shares. Jumping over to Seeking Alpha. AbbVie yields 4.87% with a payout ratio of 45.14%, dividend growth of 7 years, and again, an insane growth rate, 20.86%. So I'll be collecting that raise consistently as long as they can continue that over the length that I own this company. So then, check it out. This is also something that I want you guys to see. This payout ratio of 45%, which is generally considered a pretty safe one, $4.72 per share, and it's trading at 96.83. So your payout amount is going to be $1.18, and if you hold it through July 14th, which I did, you'll collect a payout on August 14th. So if you do the math here and you multiply the payout of $1.18 per share, and I have 1.78%. I'll get a payout of $2.01 on August 14th. Next holding that I have is Merck. Merck Company, another healthcare company. I own 2.25 shares. Average price of $77.94, and it's down to $76.73. So I'm down just a little bit, but I've already been collecting dividends, so I'm not too concerned about that. And dividends for Merck, 3.18% dividend yield annually, $2.44 per share. Payout ratio of 46.06% with a dividend growth of 9 years. The payout on Merck is currently 61 cents, holding through 6/12 of 20. Received a dividend on 7/7, which I did collect. So if we do the math here again, 61 cents per share, and I own 2.25 shares. That's a payout of $1.37. And as you can see, it's only $1.10, and the reason for that is that I didn't own this many shares through the ex-dividend date. The ex-dividend date, I only held, whatever the math would be to equal 110. But now that I bought more with my recent deposit, it's jumped up to 137. And the last company in my healthcare sector is Cardinal Health. Cardinal Health, I have $168 invested, just a little bit over that. 3.4 shares, trading at 50.58. Currently at 49.36, so it's just a little bit down. But again, I've already been collecting dividends, $1.45. So if we jump back over for the last analysis on this one, Cardinal Health, dividends, 3.94%, $1.94 per share annually, 36.71% payout ratio, with the dividend growth of 24 years. So Cardinal Health is just about to get into the sector of, or the realm, I should say, of being a dividend aristocrat. So once they break that 25, they'll jump into that category. And with this payout ratio and this growth rate, I'm sure they can sustain that for years to come, so long as nothing else happens. And again, this company is paying out 48 cents per share. Next dividend date is June 30th of this year. Payout date 7/15. I have 3.4 shares times 48 cents each. So on June 15th, which is in 3 days, should see a dividend in my account from Cardinal Health for $1.63. So that kind of wraps it up for my healthcare sector within my M1 Finance. And if you continue watching these videos, you'll see what I have in my industrials. And I highly recommend you check out my other videos of the consumer, real estate, finance, and kind of the introduction to my channel and all that other stuff. So if you really are curious, then go ahead and subscribe to my channel. Drop me a like if you like content like this and you want to see more of it. If you have any questions or anything, go ahead, feel free to ask. I really want to start a community here, so get on there and let me know what you think. Tell me what you're doing in yours. And with that, we'll see you in the next video.